In this video, we're taking a look at using support and resistance with candlesticks. As you can see, I have the Walmart chart opened again, and I'm going to show you a couple different examples here of support and resistance. Obviously, there's support here. The market just simply wouldn't break down below this area. So, obviously, you want to be a buyer in this general vicinity until shown otherwise. Now, how to use candlesticks in conjunction with this? Well, there's a lot of different ways. You can simply just play the support and resistance and not wait for the candlestick. But another thing that you can do instead is perhaps look for signs that the market is trying to turn around. So we're falling into support, and you can see that we bounced rather hard. The sellers couldn't keep up the downward pressure, and that was your first sign that you would bounce. This is actually a candlestick called a hammer. You can see this very neutral candlestick. They tried to break it down, and at the same spot found that they couldn't. We broke above that range, and everybody in that candlestick is now losing money. And they have to buy their position back in order to cover their shorts. So a lot of it will come down to simply paying attention to where price can or cannot go and looking for failure to break through that level or long wicks or something like that. Now here's a trend line that you can make out on this chart. And clearly that's a very negative turn of events on heavy volume. So what does that tell you? That tells you that support has been sliced through. Pretty straightforward there. However, along the way, here was another one of those hammers that I just talked about where we broke through but couldn't stay below there. And that, of course, is a good sign. Look at these long wicks right there on this line. That's a good sign as well. You want to see one of two things, really, when you're talking about a support or resistance level. You either want to see a candlestick that just goes right through it and closes on the other side of it. Higher time frames, of course, are more important. Or you want to see a situation where the candlestick tried to break through it but failed. Those are your two tells. Anything in between, like a candlestick closing right at support or resistance, typically is a less reliable signal because you're still talking about a 50-50 proposition. Yes, typically support and resistance holds, but it doesn't always. So with that in mind, let's take a look at some charts here, a couple random charts. Take a look at G here. Let's see if we can find an example of support and resistance. Well, here's one that we had some support here, and we gapped lower and then tried to break above there. You can see that the wick broke above the support line just briefly and then turned around and fell back down. Well, is it a surprise that we fell from there? Well, of course not, because we couldn't break through there to begin with. So a continuation of that weakness would be the default expectation. Let's take a look at Hyatt. And here is a scenario where we had some resistance here. And there's a couple different tells here. This candlestick here shows that they tried to rally and break through it, but they failed and they broke down through it. It's actually a candlestick called a hanging man, which you'll learn about later. There's another one here. And beyond that, there's an extraordinarily bearish candlestick that closed at the bottom of the session, showing just how difficult it is to get above this area. And we have since broken down. So again, this is a matter of, you have to pay attention to the psychology. Does it work 100% of the time? Of course not. But it does give you a leg up on the other traders out there who are simply looking at you have to keep in mind that there are a lot of traders out there looking at charts like this and their brokerage platforms. They don't really understand the nuances of price. They just see that it fell a couple times. They didn't get the warning. To them, this chart looks like it could be rebounding. So that's part of what makes candlestick trading so important. And so useful when it comes to support and resistance. It's something that those of us who've been trading for a while take for granted. But every once in a while, if you look at the line charts or the area charts, you really see the major problems that a lot of the public faces, quite frankly. There's an area there that showed resistance. It looks like it's zone. It's not necessarily just one line. But you can see that we couldn't break above there. And then we formed this very negative candle and then broke down. And then we formed what is known as a shooting star. The next time we tested it, it's not a huge surprise. They couldn't break above there, and then they fell. You know, support and resistance is going to be the basis of everything you trade. So you need to notice where price won't get above or below, and then start placing your trades based upon that. You know, there's a simple way to look at it. You know, we have an area here, for example, that was support, and it worked several times, but eventually it gives way. And then you realize that below here, you want to be short of this stock. This is an area where there was a lot of buying interest, and it's been absorbed. All those orders have been filled and overwhelmed. So pay attention to this. You're looking for several hits at the same line of price or same area. You know, this was hit 6, 7, 8, 9 times. Well, more than that before. So that tells you just how important this support was. And once $75 gave way, we fell pretty significantly. And you'll just see this time and time again. Quite often, markets are just going from point A to point B. So, you know, here we had support. Now it looks like we may come back down to try to find it. There's resistance there. We'll probably go back up there to try to find that eventually. It's just again and again and again. It's there's really no big secret to it. It's just where buyers and sellers are. So JP Morgan, you know, we've had some support here. I suspect there'll be some sellers right up here. There's resistance here, but there was also support there. There's people who, once that broke and it came back, they're willing to get out of their positions at break even to kind of save their accounts a bit. You know, they've been spooked back out of the market. So support resistance is crucial. Make sure you use it in all of your analysis. Pay attention to where the market will or will not go. You know, once you break through it, that's a sign as well. It's a sign that, you know, one side got overwhelmed. In this case, the buyers got overwhelmed.